Good morning, everyone, and welcome to today's morning report with me, Richard Perry, market analyst at Tech Markets, on Tuesday, the 19th of August. The European markets have once again started positively, and that has been on the back of general improvement in risk appetite, and that has been driven by reports that in Berlin that the talks going on between Russia and Ukraine over attempts to calm the geopolitical tensions are actually making moderate progress. The aid convoy, the humanitarian aid convoy that Russia has been sending, apparently has been agreed to move into Ukraine. So that is perceived to be a positive, and also it looks like the very fact that they're actually talking to each other is obviously a good thing, and risk appetite has taken a shot in the arm on the back of that. Certainly, Wall Street markets yesterday about percent higher into the close. Asian trading was also positive, and the European session again has started positively today. So we're looking fairly decent on that regard. In terms of currencies, there is a bit of a dollar bias in the trading early on today. Not a huge amount, but certainly it looks like the cable is slightly lower in front of the key inflation data that I'll talk about in a minute. But also there's the Kiwi dollar as well, about 0.5% lower, and that came after New Zealand inflation dropped significantly today. So what we've seen is a continued reduction in risk, in volatility on the stock markets, on the VIX index, and also we've seen, as I said, that dollar index start to find a bit of support again, moving back to the upside. So it's still a bit of a consolidation area, but it looks like it's a positive day so far for the dollar. As I said, you've got the inflation data out. UK inflation comes out at 9:30. UK inflation has actually been below that 2% target that the Bank of England originally set, and that's been throughout 2014. In fact, it's actually forecast to dip back slightly to 1.8% from the 1.9% that we saw last month, and that certainly would not help necessarily the Bank of England in its potential tightening cycle in terms of how the hawks are viewing when they're going to be raising interest rates. So that would not be necessarily a positive move for sterling. Moving into the afternoon at 1:30, you've got quite a lot of data coming out. First of all, the US inflation, that's forecast to come in slightly under last month at 2.0%, but that is just only a minor reduction from what we saw last month. And then also you've got the housing data. You've got the building permits that come out at 1:30 also. That's forecast actually to improve slightly to 1 million on the building permits. And then also you've got the housing starts, which are again expected to improve slightly to 970,000 from 893. So around 1:30 could be a bit of volatility on the markets due to the fact that you've got this range of US data coming out. Now, in terms of my chart of the day, I'm going to be looking at silver. I've been talking about the fact that gold and silver have both been trading on geopolitical tensions, and as these tensions have begun to sort of calm down, gold has just dipped back a bit, and certainly silver over the past 5 weeks has actually been on a fairly consistent downtrend, despite the fact that you have had fluctuations in these geopolitical tensions. But silver remains under pressure, continues to correct back. It's trading below all its moving averages. It's got in this big downtrend. That downtrend currently comes in around the 20, say, well, that says 2013 there, but this is 2013 is pretty much the top of this resistance band that you've got over the last couple of weeks, that a couple of days ago broke down and took it to and that makes it onto another lower low, which just continues this decline you'd see. So you'd be using any sort of recovery within this within this downtrend as a chance to sell. So any rebound into this rally, into this resistance band between 1969 and 2015, you'd be using that as a chance to sell. You've got all these momentum indicators in bearish configuration, and just suggesting that any sort of rallies again should be a chance to sell. So it looks like what we're seeing is just a minor rebound today, but on the intraday chart, you'll notice that there's consistent lower lows, big resistance. If you zoom out here, on consistently on the breakdown of the old support becoming new resistance, and that seems to be the case again. We've broke below 1969, so that tends to now come in as the basis of new resistance. And you've got this 200-hour moving average, which on this intraday chart has been a pretty good basis of resistance as well. That currently comes in at 1984. So you can see that there is room for a little bit of a rebound, but even on the momentum indicators on the hourly chart, very weak configuration. RSI consistently falling over under 60 and then coming back towards oversold. MACD lines under neutral as well. So any sort of rebound, I think, in this chart is a chance to sell. In terms of downside, you'd be certainly looking at well, I mean, there's not a great deal of support going on under that 1950 area until you get back towards below $19 again, and then that 1860 key support low of that June low. So there is certainly scope for further downside. Anyway, I wish you good luck in your trading on silver today, and I will speak to you later. Thank you.